Start.
Good morning, everyone. My name is Yetunde, Senior Manager in the Tax Advisory and Regulatory Services of Anderson Tax. Welcome to this 9th webinar series of Anderson Tax, the first in the year 2021. We thank you all for joining us. This seminar is titled Finance Act 2020 Implications for Businesses and Revenue Generation. We have an array of seasoned panelists who would be helping us digest and digress, the Finance Act 2020. We also welcome participation from our attendees. You can send in your questions, through the question box. Without further ado, we would go straight into the presentation for today. For the presentation, would have an introduction, would highlight some of the key issues that we would discuss during the session today, and would also ask our panelists questions and we'll take questions from members of the audience. Now, President Muhammadu Buhari recently signed the Finance Bill 2020, which is now the Finance Act 2020, into law. And this is a welcome development. We recall that in early 2020, the Finance Act 2019 was also signed. The Finance Act 2020 was enacted to redefine select provisions of various statutes which seek to clarify certain provisions of the law. The Act amends key provisions of several acts, including the Capital Gains Tax Act, the Companies Income Tax Act, the Industrial Development Income Tax Relief Act, the Personal Income Tax Act, Tertiary Education Trust Fund Act, and the Customs and Excise Tariffs Act. Other acts which were amended by the Finance Act 2020 include the VAT Act, the FIRS Establishment Act, Public Procurement Act, NEBSA Act, amongst others. Now, we'll go straight into some of the key issues for discussion, with our main focus will be on the provisions that affect the fiscal regime in Nigeria. Now, the first issue we will discuss is the minimum tax concessions. The Finance Act modified the basis for calculating minimum tax by reducing the minimum tax payable by companies from 0.5% to 0.25% of gross turnover of companies less franked investment income. Now, this reduced rate will only apply to tax returns filed for any year of assessment falling due on any date between 1st January 2020 and 31st December 2021. So essentially a 2-year period starting from 1st January 2020, that's last year, till the end of this year. Now, I think one of the main issues is that what happens to returns that have already been filed for 2020? How would they be able to take advantage of this concession? Would they be able to apply for tax refunds? These are some of the issues that we will be discussing with our seasoned panelists. Now, another issue for consideration is the definition of compensation for loss of office for the purpose of capital gains tax. Now, the Act provides for exemption of capital gains on compensation or damage for loss of office up to a maximum of 10 million naira and an imposition of CGT on any amount that exceeds 10 million naira. The Act also places an obligation for deducting and remitting CGT on the compensation for loss of office to the payer of such compensation. This amendment seems to have resolved most of the ambiguities with respect to the provisions. However, one critical issue is, what do we even mean by compensation for loss of office? This wasn't defined in the Act. Now, which of the following will be classified as compensation for loss of office? Would it be termination of employment under a restructuring program, outright dismissal, involuntary resignation, gratuity payments? I mean, can we really classify gratuity payments as compensation for loss of office? What about terminal benefits or retirement benefits? These are some of the issues that we need to highlight, because one of the tenets of a good tax system is certainty. Now, another key issue, and this has definitely generated a lot of buzz, is the issue of computation of consolidated relief allowance for PAYE purposes. PAYE is the pay as you earn scheme. Now, the new amendment to section 33(2) of PITA implies that tax-exempt items should now be deducted from gross income before computing consolidated relief allowance. That's CRA for short. Now, essentially, gross income was defined, to exclude these exempted items, and some of these items include employee pension deductions, contributions to the National Housing Fund or to the National Health Scheme. The effect of this amendment, whether intended or not, is that it will result in a higher employee tax and lower disposable income for employees. Now, more importantly, employers are required to update their PAYE computation templates and software, and notify their employees, for the purpose of clarity. The definition of gross income, was amended, and essentially the amendment takes place immediately. So there isn't even a buffer period, for when you can say, okay, this is when this is supposed to take effect. Moreover, and I think more importantly, can this amendment be considered fair at this time? Was this an unintended consequence of an amendment? And is this something that should be revised, as quickly as possible? This will definitely be discussed by our seasoned panelists. Now, the next issue that we have is the applicability of VAT to lease of buildings. Thankfully, the definition of goods was clarified, and it has laid to rest the controversy on whether VAT is applicable to transactions relating to the purchase of buildings, because there still remained a controversy as to whether VAT would only apply to land and would not apply to buildings. But I think the amendment to the VAT Act by the Finance Act 2020 has clarified this. So there shouldn't be any controversy any longer. However, the issue of lease of buildings still somewhat, may still be somewhat unclear, in the sense that while lease of buildings for both commercial and residential purposes should be VAT exempt, in our opinion, given that if you look at the definition of goods, it excludes land. However, the law does not expressly exempt lease of buildings from VAT, and it remains to be seen how the FIRS will go about interpreting this. However, if we look at the doctrine of quid platonto, anything that is attached to the land is also attached to the building. So it presupposes that if the building is considered the goods and building is exempt, the supply of building is exempt from VAT, then even leases which relate to the building, whether commercial or for residential purposes, should also be exempt. Now, another issue is the issue of significant economic presence rule for non-resident individuals. Now, the SCP rule was introduced in the Companies Income Tax Act, and a similar provision was also provided for in the Personal Income Tax Act. Now, the Finance Act provides that technical consultancy, management, and professional services rendered to Nigerian residents by foreign individuals, executor, or trustees that have SCP in Nigeria will be deemed to be derived from Nigeria and taxable in Nigeria. It also provides that withholding tax will be applicable on income from these types of transactions. So how exactly would this be implemented? Another key amendment in the Finance Act 2020 is the use of technology. The Act introduces the use of technology in the collection and remittance of taxes due on international transactions, in the supply of digital services, in the case of transactions carried out through remote, digital, electronic, or such other platforms. The Act also provides for the use of proprietary technology to automate tax administration process, including tax assessment and information gathered. Now, this is very key. Another thing we would also be looking at is the issue of tax refunds. Prior to the enactment of the Finance Act, the FIRS Establishment Act had always had a provision that says refunds should be payable or paid within 90 days of FIRS agreeing to the eligibility of the taxpayer's claim. However, we know that in practice, there were significant delays in paying tax refund to eligible taxpayers, even after completing the rigorous process of audit. And I can tell you that the withholding tax or any refund audit is a tremendously rigorous procedure. The Finance Act now provides that the Accountant General of the Federation shall open a dedicated account to be administered by the FIRS for the purpose of settling tax refund. We will be very, very interested in how this will be administered and the prospects of taxpayers obtaining tax refund based on this amendment. These and other issues would be discussed in the course of this webinar. We thank you for listening. We'll go straight into the question segment. I would be introducing our seasoned panelists. For the purpose of this seminar, we have the FIRS chairman, Mr. Muhammad Nami. I will just read out his profile. Mr. Nami is the chairman of FIRS. He's an expert tax advisor and a seasoned tax accounting and management professional with almost 3 decades of practical working environment serving clients in banking, manufacturing, services, and public sectors, as well as non-profit organizations. We also have Mr. Iro Upai. Mr. Upai is the Director and Head of Technical at the Federal Inland Revenue Service, with decades of experience in tax policy and administration. The next panelist would be Mr. Femi Oluwani. Mr. Oluwani is the Coordinating Director, Tax Operations Group in the FIRS. He has several years of experience in tax policy and administration. We also have Sebastian Odima. He is the head of country tax, Mulema Maersk, Nigeria, where he is responsible for the tax affairs of approximately 8 Maersk companies in Nigeria. In his role, he supervises tax compliance, transfer pricing risk assessment of related party transactions, tax strategy, and advisory on an ongoing basis. We also have representatives of the Lagos, of the LIRS that will be joining us. From the Anderson end, we have Chinedu Ezumike, partner and head of commercial practice units. He has over 14 years experience in the provision of professional tax and regulatory services to clients. We also have Chinwedu Enechi, who is an associate director, oil, gas, and power. Very seasoned array of panelists, from various sectors, both from the private sector, that's from the industry. We have the professionals who have dealt with an array of issues, and more importantly, we have the regulator here, with the regulators here who we can pose our questions to. So without further ado, we will go straight into the question segment. So my first question would be to Chinedu Ezumike. Chinedu, good morning. Now, just to set the ball rolling, we know that the government, both at the state and federal levels, are in dire need of revenue to fund the 2021 budget. How best do you think the government can significantly increase revenue, both from the short-term and long-term basis?
Okay, thank you very much, and thanks to other panelists for joining. Of course, you know that tax revenue is not something you can switch on like a switch, to say once I do something now, I'll get the results immediately. Tax reform usually takes a while for the results to start coming. So I think the tax authorities have done a lot already over the last couple of years by bringing a lot of clarity to the tax laws and helping people who want to comply to be compliant. When you have a lot of controversial areas, it hinders compliance. And so the more we bring these reforms and these changes and these clarities, it indeed helps compliance, thereby increasing revenue. Of course, there is the issue of technology and automation. You will never be able to audit every single company in Nigeria. That's not possible. So you need to continue to enhance automation. I saw in the news recently that the president has asked FIRS to increase the pace of automation and also asked the other ministries and departments to allow FIRS access to their processes and equipment so that they can automate. So that, again, that helps, because the more you automate, the more you make it easy to track things and know transactions that are happening and all that. Then that, again, increases revenue. Some time ago, FIRS collected a lot of data from airlines, from bureau de change, from car registries, from banks, data from Nigerian transactions and all that. But being able to then profile those data, interpret it, and then go after individuals who have not been compliant. Again, you need a lot of technology, you need a lot of software to be able to interpret those data very well. Also, you can never do without enforcement. After you've laid the rules, after you've provided clarity, you need to be able to enforce and be able to in a way, punish people that have not been compliant. A few years ago, we had VATs, which it may not have been as successful as it was meant to be, but at least it drove a lot of tax compliance. It brought a lot of attention to the issue of taxes. But it was expected that after the VATs, after some people have come up and declared their taxes, that for people who still didn't comply, there was supposed to be consequences. I'm not sure that we have done enough in that regard to punish non-compliance so as to then aid more people to be willing to comply. So those are the things that government will continue to do. None of them will solve the problem today, but as you continue to enforce and provide clarity and push people to comply and educate people, that's how compliance and revenue collection will continue to improve. Thank you.
All right, thank you very much, Chinedu. So essentially what you're saying is that it's very important for the government to continue to get people to comply, even with all their programs, and to drive people towards compliance. And of course, we also see the enactment of the Finance Act, first the Finance Act of 2019 and now the Finance Act of 2020 as a step in the right direction. Now I'll move to our panelists from the industry, Sebastian Odima, from AP Moller Maersk. Now that we see that the Finance Act, seems to be a yearly affair, at least we've had it 2 years consecutively, and I must say that's an achievement. That's a real achievement to this current administration, both at the federal government level and even in terms of the FIRS, and the State Inland Revenue Service. Do you think this is a step in the right direction in terms of having Finance Act almost on a yearly basis? Sebastian.
Thank you, Yewande. That's a very nice question. It's something that the tax professionals in Nigeria has clamored for a very long time, that is important for us to have a dynamic tax system that is in tune with the time. So I remember before last year, you have some provisions in the tax law that even the amount of penalty there is not even reflective. A company can decide to say, okay, I will just decide not to comply. And then when you calculate the whole total penalty of 2,500 and then 250, it comes to nothing. So it does not drive compliance. So I think it's a step in the right direction. But then it's something that needs to be balanced with tax certainty. If I remember, in 2016, the G20 commissioned a survey with the help of OECD and IMF, talking about tax certainty. The respondent from the industry or the taxpayers, about 60% decided that certainty in tax system will drive investment, cross-border investment. And even from the tax administrators, about 80% of them also mentioned the importance of tax certainty, because even if you are the tax administrator, there is changes in the tax law. You need time also to do the proper training to be able to implement whatever changes you've done there. So in terms of those changes, there need to be some part you look at. These are issues that fundamental issues that I don't need to change maybe for another 5 years because I need certainty for the businesses. But then you can now have the yearly changes where it is just to clarify, to say, okay, there's an ambiguity here. And whilst there's an ambiguity, it impacts tax collection because then cases get stored up in dispute mechanism. So for me, it's a very right step. But then there needs to be a balance in terms of how do I drive tax certainty, because one of the issues raised is legislative changes and tax policy alignment as part of the reason why some companies believe that certainty becomes important, that those things need to be consistent. So if, for example, you change the VAT law this year, maybe rate to 7.5%, I don't expect you that next year again, you're going to change it again. You need to, at least that part need to be there for at least for like 3 years or 5 years to drive certainty before you now change it. But then I expect if, for example, there is a problem with definition of certain terms or ambiguity where people are not clear, then your yearly Finance Act needs to clarify that. Also, so sometimes that the guys drafting the law, this is the intention, but then maybe due to poor drafting, it came out wrongly. Then I expect that the subsequent one, those are corrected through the yearly part. So for me, yes, it's a good step in the right direction, but we need to create a balance between tax certainty and also being up to date with the dynamism of the environment we see ourselves at the moment. Thank you.
All right. Thank you very much, Sebastian, for that insightful response. So in as much as we want clarifications, the tax law should not be static. However, this must be balanced with, tax certainty, which is a canon, of taxation. My next question would be to Chinwendu Enechi. Chinwendu, we know now, Sebastian has, just talked about the need to have certainty. The Finance Act recently reduced the duty payable on certain items, such as tractors, motor vehicles, aircrafts. What do you think would be the potential implication, of the reduction in custom duty for these items with respect to revenue generation? That's on one hand. And of course, we also know that we have the local vehicle manufacturing and assembling industry. What would be the impact, of this reduction, on that industry? Chinwendu.
Thank you so much for that question. I think the way it is, obviously, when you grant to the government, but again, I think what needs to be taken into consideration is the long-term effect of that policy change. So which is what I think the government, yes, in the short run, of course, there will be a reduction in the revenue from import duties with respect to those asset classes. But again, you need to, ask yourself, what is the view, long-term view that the government has? What are we trying to do? What are we trying to encourage? Because obviously, you need to consider the ripple effect of those policies in the Nigerian businesses and see how that then translates to a long-term benefit to the government. Because obviously, if you use a policy change to stimulate an industry, what you find out is that it sort of helps that industry to then grow. And what then happens is that with growth in a particular industry, will result in revenue. So while you may have a reduction in government revenue with respect to the import duties, those companies are going to then end up growing and generating more revenue, which then translates to other kind of taxes. So yes, on one side, you may have lost something, but on the other side, there's an incremental change that the government will experience in terms of tax revenue return.
All right, thank you very much. I don't know if Chinedu, would you want to make your contribution to that issue of balancing the need to have increased revenue with the reduced customs duty, as well as looking at the automotive industry and how to also promote our own local manufacturing and assembly?
Yeah, I mean, thank you very much. Like Chiwadu said, as a government, when you have a policy, you need to continue to review the policy to know whether you are achieving your objective. That policy has been there for a while now. I think going to 7 to 8 years, if not more. And the clear impact of it is that cars became more expensive. You have a lot of importers diverting their cars to other countries, especially our neighbor republic, and government losing that part of the revenue because aiding a lot of smuggling and all that. So having reviewed the policy, car manufacturing, is it really an area of competitive advantage for us as a country? Do we have the supporting industry that can make that industry a success on the long run? You know, some things might be a good idea to have, but in terms of sustainability, can you really sustain a car manufacturing industry in Nigeria now? So I think government revisiting the policy, you know, to especially under this COVID situation where the economy is really impacted, just to give people kind of a breathing space, I think is a good one. We sometimes you're not able to force a particular industry to grow if the other economic environment, if the economic environment is not supportive of it. So maybe car manufacturing is not one place that will have that kind of competitive advantage to protect, because in that 8 years of the policy, I'm not sure we have had a lot of traction in that regard.
All right, thank you very much, Chinedu, for that contribution. So it seems a step in the right direction, you know, in the short term, especially given the economic realities that we have now. Now, my next question would be to Mr. Ukpai. Mr. Ukpai is the head technical, you know, at FIRS. So my first question would be, I mean, we're talking about the Finance Act, and, you know, part of the reason that we're here is there are definitely some issues, you know, that may seem unclear, you know, to taxpayers, you know, and even consultants. Is the FIRS planning to issue circulars or publications, you know, on the implementation of the Finance Act 2020, similar to what was done, you know, in 2019? Mr. Okpai, I think you're muted. Yes, Mr. Okpai, you're muted, sir.
Okay, yeah, okay. Like I said, my name is Okpai, you rightly said, Director Technical FIRS. FIRS, as usual, we are planning to issue operational guideline on Finance Act 2020, both for internal consumption and external consumption. We are going to issue the guideline in addition to a circular to the whole world to say, yes, our thought, our take on the finance side, because we need to explain to the general public on the implication and the workability of the finance side, so that those taxpayers who are filing returns with us, who are remitting their money to us, will not run into trouble as to what is expected of them. You know, the essence of the circular is to simplify, explain the meaning, and simplify other things in relation to the Finance Act to the taxpayer, so that everybody will be on the same level and on the same board. So to answer the question, yes, very soon, the operational guideline and operational circular will be released to the general public and for internal consumption on the workability of the Finance Acts.
All right, thank you very much, Mr. Akbar. I'm sure we're all happy and eagerly awaiting the circulars. Now, I will still come to you for my next question, which is essentially flowing from your last response. Now, we have the Finance Act 2019, and now we have the Finance Act 2020. From FIRS perspective, what impact, you know, do we think this legislation would have in terms of tax collection, you know, especially in this new year, this fiscal year 2021? Or what impact did the Finance Act 2019 have, you know, on 2020? Of course, we know we had the COVID, so you can speak about that. But specifically to 2021, what impact do we expect to see, you know, in terms of tax collection?
Thank you very much. Like, so the Finance Act was to correct some few errors and few certain things that were not too clear in Finance Act 2019. But looking at the Finance Act itself generally is a good thing, because like Chinedu said, it helped us to make some quick changes and fix quick areas that would have taken so much long time to fix. If you know that this thing is not working, and in the past, by the time both the National Assembly and the sending a bill and it goes on and around, it will be very difficult to do. But these days, using this Finance Act mechanism via budget, and everybody is agreeing and President signed, it has helped. Because you recall that in 2020, in spite of the economic situations occasioned by lockdown and the coronavirus, including NSAS and whatnot, as a result of the simplification of the Finance Act and increase in VAT and all whatnot, the FRS were able to achieve 98% of its tax collection, which was a fantastic achievement considering the fact that everybody had expected that because of pandemic and NSAS and coronavirus, they were not going to achieve success. So leveraging on 2020 Finance Act, we strongly believe, because the service also participated in the making of the Finance Act 2020. So we believe that with further simplification to 2019, with further correction of the in 2021, we collect more revenue than we did in 2020. So because the essence of the act itself is to simplify tax laws and make it easy for the taxpayers to understand, and for you, the consultant, also to understand, and for the staff to understand. So it's to make it clear for everybody that is involved in tax administration. And when you understand something better, of course, your performance will be better. If you understand the topic that the examiner is going to ask, it will make it to write very well. So with the new Finance Act 2020, leveraging on correcting certain errors we observed in 2019, is going to make it easier for us to collect more money in 2021, for us to understand the tax in 2021, and for everybody involved to understand it. So we are believing strongly that with the determination and zeal and the support of our wonderful and amiable chairman, Mohamed Maman Nani, who is always talking about technology. And we are imparting and putting too many technological items to ensure that we collect more. We know the world 21st century is all about technology. So the chairman is talking so much on technology. If that's at 2020, FRS will do better in 2020.
All right.
Hello?
Thank you very much, Mr. Ekwe, for that wonderful response. And I must commend FRS that you were still able to achieve 98%, of your target despite the COVID challenges. And I think that speaks to the tenacity, of the FRS under the leadership of the current chairman. Now, you've talked about the use of technology. So I would take my next questions, on that. Now, my next question would be to Sebastian. How do you think the provisions of the Finance Act with respect to technology, the use of technology by the tax authorities, how do you think that would impact taxpayers' processes and interactions with the tax authority? And in what areas do you think FRS can leverage technology to simplify the tax administration process? Fortunately, we have Mr. Bai here. So just you tell us, from a taxpayer's perspective, what you expect with respect to the use of technology. Sebastian?
Okay, thank you. It's for me, I think that's a very step. We can't be talking about the collections from FRS if there was no use of technology last year. And if you remember last year, most people have to stay at home and then and work from home. Filing your tax returns was done from home. And at least, so that was actually what helped as well. The technology started last year. But for me, I think they can still do more because I realized that most of the time that we try to have online meetings, it was not that effective. So if I want to look at it, where do I think they need to deploy? I'm looking at in the conduct of audit. Because I tried to do several audits over last year, and I realized that if you ask for somebody to send you a GL through email, that means you will not be able to send that. And so if I look at some other countries, even Ivory Coast beside us here, and then the Benin Republic, now what they did, the audit they did last year was to set up a portal. So for example, if I'm doing this audit, we can have a portal where the taxpayer can upload whatever document that the tax authority requires on that portal. And then the tax authority can review those documents from that portal. What it helps is that you are not sending email with 25 gig document that will never go, and then the FRS person is struggling to open it. One of the audits I know we try to do leverage on some system that we have in our company to say, okay, I can give you access to this particular platform. So I will just upload those documents there, and then you can review. What also it helps is that there is no argument on the document I provided. So if the FRS say, oh, I did not provide this document, we can always go back to that platform and check all the documents that have been provided. So for me, that's one of the areas I think we should leverage technology to make sure that some of those audits are concluded on time in terms of providing documentation and whatnot. The second part will be in terms of the reconciliation meetings. And then to say, how do we increase, do we need to increase the bandwidth of the FRS system, because some of the meetings we tried to hold online was not possible because there was issues of, oh, we can't hear you, we're unable to communicate properly because of difference in bandwidth in technology. I want to also see that part. One other area that I want to see influence of technology is in the production of foreign denominated credit notes. Most companies are still struggling to collect those parts. You go and file tax return and then they say, oh, we don't have that on the system. Even the FRS don't have that details on their own portal. So that for me is a big chunk. And for some companies, that represents a big impact on their cash flow, which they should be able to use. So for me, these are clear areas that I think technology should be leveraged on to make the life of the taxpayer better. Thank you.
All right. Thank you very much, Sebastian. From the taxpayer's perspective, you've touched on the issue of tax refund, and our next couple of questions will come from that. But before we go on, we'll give Mr. Uber.
Yes. Thank you very much.
I was just coming to you to respond, to Sebastian, as well as over 200 attendees that we have who are watching this session live. So we want you to respond and tell us what exactly would taxpayers, expect from the FRS in terms of service delivery. What are the plans that FRS has, to deploy technology to improve taxpayers' expectation and experience, especially given the fact that the president recently, just a few days ago, actually directed FRS to deploy technology, and automation in line with international best practice. So please go ahead, sir.
Yeah, thank you very much, Itunde, and everybody that is on the panel. So thank you so much. Sebastian, yes, you are right in certain areas, but recall that last year, when there was a total lockdown, the FRS took a decision through the chairman who directed audit people to now use technology and get the documents direct from the taxpayer. They were uploading the information we needed. Of course, I was deeply involved. I was the head of large tax audit Abuja then we're getting our online, we're sending the reconciled figure online, and sometimes we engage ourselves in a long discussion for a meeting. Yes, because something that suddenly started, because of the COVID and total lockdown, most people need access to the system because we already had a plan. Immediately the new chairman came in, Mr. Nani, you already started planning on how to automate audit process. And because of the thing was already in the pipeline, it was easier for us to quickly change the tactics to say, okay, yes, we can't come to your premises, you can't come to our place, send us this document online, we'll review it and analyze it online. And we started it. It may not have been 100% correct and smooth because it was something that started immediately and suddenly because of this. But having used and tested it, we have seen that it's also a very good mechanism going forward. and we are working very seriously to automate all audit processes. As we see, some people are going around to teach people, to explain to people the new automated process in audit, so that, like he said, you send us the document, we review the document, we can also do the reconciliation. What is different? This meeting could have been a reconciliation meeting, and will explain to us that there's no difference. As we talk, and that's where we are going. So yes, on the issue of bandwidth, the chairman is working very seriously to increase the bandwidth. You know, we are the ones that were not giving us good service. We are working towards improving it. So very soon we will improve on our bandwidth, on our internet process, so that, don't forget that Nigeria is too big and we're expanding. Even though we may still have some skeletal problems, hiccups as a result of some areas in the country not being connected to internet and all whatnot. But in that place, we are making provision, a strong provision for them, so that when you take your returns to our office, like it's done in some other jurisdictions like South Africa, Canada, Australia, you queue it in there, and then we can help you queue it and you'll be online. And we are also automating all filing process. We started with the large tax offices, and we are working as we speak to ensure that from medium tasks to micro and small tasks, that everybody now begin to file their tasks online. And we are using task rule to simplify the filing process. In fact, I participated in a committee that just recently reviewed the online filing process from the beginning to the end, including even the capital allowances, computation, and all whatnot, so that it will be uniform, both the manual and online. We didn't want a situation where those filing manual, even though we may not automatically close the manual for sources of what I have just said, areas where there's no light, no internet, so that we can still help them. But majority of our returns in 2021 is going to be online. So we are working, and the chairman is doing excellently well in that direction. So thank you very much. I appreciate. Very soon you'll be seeing the FRS hand in all the areas in terms of technology deployment.
All right, thank you very much, Mr. Ekwe. I'm sure we consultants as well as taxpayers are looking forward to an easier process, an easier tax compliance process that would be less burdensome. Yes, and we really appreciate the efforts, that have been put in place so far under the leadership of the current FIRS chairman. So now we move to the issue of tax refunds. I think this is one of the big elephants in the room. Now, I will go to Chinedu. Chinedu, what is your view, on the current tax refund process in Nigeria? I know that you've had your experience. I don't want to call them nightmares, And how do you think this process can be improved in the light of the amendments, in the FIRS Establishment Act? Chinedu, over to you. Chinedu, you're muted.
Okay, sir. Thank you very much. I think the reform process, I can say, is in two major parts. There is the part where you apply for the refund, the FIRS audits you, and to establish the amount. When the amount is confirmed, you then engage with the process of being paid the refund. I think the amendment that was made is more with the second process, where you're trying to create new accounts, because the amount has to be budgeted and then put in the account, so that the FIRS is able to pay people after the refund has been established. But the bigger problem is in the process of the refund itself. When you apply for a refund, sometimes the way FIRS approaches the refund application is almost like, why are you asking for money? That kind of thing. And they come after you. The refund audits, sometimes can be very, very excruciating. The process is, let me just say, is different from the normal audits, as if the objective is to ensure that any amount you're asking for a refund is extinguished. Like you said, we've been involved in quite a few refunds in the past. We've gone through the process. Eventually, of course, the FIRS established the amount. Usually not the amount you ask for, but they will establish some amount. What we've done in the past is not wait for the process for the FIRS to cut a check to the client, because that again can take quite a while. So what we've been able to do in the past is to allow, FRS allows the client to then take the established amount from other liabilities, i.e. if you have the other withholding tax liability or VAT liability or whatever liability, because the amount has been established, you kind of recover it from any other amount that is used for FRS. Sometimes that's more efficient, and the client is able to get quicker value for money, because after the FRS, after the amount has been established as refund, the FRS sometimes they have to even ration the available amount, because, like I said, the amount has to be budgeted for, and they may not be able to pay everybody that has applied for refund if you're waiting for your check to come. So I think the amendment will bring more clarity, will ease the process a bit. It may not solve the whole problem at that end, because again, there's a question of how do you even know? It's difficult for FRS to know how much people will apply for refund in a particular year and be able to provide for it, and whatever is not budgeted for, they cannot spend. So there's a whole lot of planning and simulation that has to go into that. But where we think even more reform is needed is in the idea of refund itself. For FRS to know that it is part of tax administration, it is not taxpayers just asking for things. For example, if a company is making losses and withholding tax has been deducted from the company over a period and is running into billions, that's the company's cash, which the company is not able to use to offset taxes. And in fact, in some instances, the auditors will even want to impair those withholding tax credit notes. And they are real assets for the company. So when a company comes to the FRS and say, okay, can I get this money back, or can I recover it against other liabilities? The approach shouldn't be punitive. I think that's where the mindset really needs to be reformed.
Just give me 2 minutes, I come back. Yeah.
All right, thank you very much, Chinedu. So it's not just enough to set up an account, but first of all, you have to start from the refund audit process, itself. So I will go back to Mr. Kwai to respond. With respect to the refund audit process, is there any way that FRS is currently is there any way that process can be simplified, and correct the, will I say, attitude or impression, that taxpayers are coming to collect what is not due to them? And then more importantly, the amendment to the FRS Establishment Act now authorizes the creation of a fund for the settlement of tax refund. How will the FRS ensure that this refund process is, smoother, and more automated, after the audit process? Mr. Bai, you are muted, sir.
Hello, can you hear me?
Yes, we can hear you. Go ahead, sir.
Okay, thank you. Well, we'll go back to say the new administration we have under the leadership of Mr. Nani is focused on ease of doing business and reforming a lot of our processes. And majorly, one of the first time the taxpayer to make sure that it reduces the process, the department and unit that were supposed to pass through it. A lot of obstacles and hiccups have been removed. But however, you know that the refund is a process of the law that says once you apply for refund, there should be verification by way of audit to confirm the authenticity of the amount you are asking to be refunded to you. And that's what brings about the issue of audit. But however, even the refund audit, each Chinedu can say correctly, what are we trying to do in a refund? To be sure that the amount we are claiming, especially from deducted from then. If you are bringing credit note, or if you are claiming you have so and so credit, if you are favor and you want us to refund you, basically the model thing that we must be sure that when you withdraw sub that amount, that you have accounted for the whole of them, because it's a revenue. It's from your income, the money that was supposed to be paid to you, that a certain percentage is taken off. And if you are asking for this, you find out a situation where some of them may not even have reported 1 quarter or half. That's for past experience. And so that's why we then said, okay, let's look at it and then check other things. And then again, you need to be sure that before we refund you money, that they are not obvious debt, obvious things you are owing us. You can't be owing us so much and you want us to refund you money. They have to be a balance. You are asking us for money, you're not owing us. Yes, we are willing to refund. But the other processes that the Finance Act 2020 have done by saying, okay, create a fund and all this one, is what will also help us to pay them. Because like Chinedu rightly said, it's a budgetary something. Sometimes the money is not there because sometimes you just get a refund request from, like somebody hit bail, everyone come and apply for a refund. I know this is like when somebody have come and they funded, he go back to tell another person who may have been reluctant to come and apply for his refund, thinking that FRS will not refund. Ah, yes, I got my money. FRS did well, they have refunded my money. I said, okay, let me go and apply. So don't forget that sometimes the money, the credit note, some of them want us to refund. And something, if they have pension, they can as well use it to pay their future taxes. But because some people have seen that we are refunding, many people come, it is because we are refunding that we get more pressure from the public, from the taxpayers for us to refund. But the process is being simplified, I assure you. I assure you that going forward, a lot of things have been taken into consideration to make it easier for taxpayers to get their refund once the confirmation is done by audit. And the audit process has also been reduced to fast track the process for you to get. So we are not sleeping. We are in tune with the ease of doing business aspect of our operation. We are working very hard for it. Thank you.
Thank you very much for that response, Mr. Okwai. I'm sure a lot of taxpayers are happy to hear, that you're already in the process of, actually issuing out those refunds. Now, still flowing from that, and I will stay with you, Mr. Okwai. In the Finance Act 2020, there was a reduction, of the minimum tax rate from 0.5% to 0.25% of gross turnover. And this was essentially to cushion the impact of COVID-19 on, companies. Given that some companies, have already filed their returns, between 1st of January and 31st of December 2020, what process do you have in place, to ensure that they can get some, their refunds or the tax credit option that will be open to the companies that have already, filed returns and paid using the higher rates, instead of the now reduced rate of 0.25%. What process do you have, given that it is even a change, in the legislation, and it is specifically to cushion the effects, of COVID? So it has to be something immediate.
Yeah, it's okay. Thank you very much, Yetunde. Like rightly said, it has become a law, so to say, that the thing have changed from 0.05 to 0.025 to cushion the impact of COVID, which FRS is a good driver, because last year you can know the number of palliative measures that we issued to cushion the impact of COVID. We gave out first one where we asked people, if you pay within so and so time, we can do this. Even like last year, like when we said there was going to be crisis, January to March, we said everybody come and take your tax clearance free of charge. Just come, just apply. We'll give you so that you can go and let's go and look for your contract, go and look for this, to pay. And then while we're still on it, the COVID came and we issued palliative to say, if you pay, if you are owing us this and so this thing, can give you this, and then you go and pay. So yes, we are studying the problem or hiccups that we are going to have as a result of the reduction from 0.05 to 0.025, and we'll be making clarification, we'll be making a statement to it in the nearest law. The law is already there. It's we were studying we are studying it very, very, very well. Don't forget that this was just signed 2-3 weeks ago, and then unfortunately, webinars, this session is coming so quick that a committee is being set up to look into it, and especially those areas of conflict, to identify how we are going to resolve that conflict for those who, after the resolution, we may want us to refund to them or not to refund to them. So we are looking into it. We'll take a comprehensive view on it very soon.
All right, thank you very much, Mr. Kwan. And I mean, we really appreciate the fact that, the regulator comes together, with the consultants, and the taxpayers on sessions like this, where we can have discussions and highlight some of these issues, so that by the time, you eventually put together those circulars, we expect that there will be significant clarifications, when it comes to these issues. Now, I would move to the issue of VAT, and my next question would be to Chinwendu on the issue of VAT, and buildings, and land. Now, based on the exclusion of buildings from the definition of goods, do you think lease of buildings for commercial and or residential purposes should be exempt from VAT? We recall that even the Finance Act 2019, had excluded lands, from VAT, but in the circular issued by FIRS, they still included buildings, and some of us argued vehemently against that, because if you look at the legal principle of quid pro toto solo sedit, anything that is attached to the land, also forms part of the building. Now, would a lease also be considered, as part of land and building that should also be exempt from VAT? I will hear your views, Chinwendu. I have my own personal views. I think this is an area that I feel very strongly about. So over to you, Chinwendu.
Okay, thank you so much. I actually like the question, and I want to believe that my views are aligned with you. Just to hear me, I think one of the things that is very key in terms of when you have a tax policy is, and I think you touched on it, is also certainty and clarity. Because again, taxpayers need to be clear. They need to be sure what the law is saying, or how the FIRS may want to interpret a certain provision. And I think what, in my own view, what this Finance Act has tried to do is to provide some clarity with respect to that, because we've also always argued, this issue whether VAT should apply to lease of office building or residential building as well. And I think you did touch on that legal principle, and I will agree with that, because if what is on the land, if land has been termed not to be a good, then by all means, whatever is on land should also enjoy the benefits that can be attributable to the land. So if you ask me, I don't think that VAT should apply to lease of building, because I want to believe that there's a sense in introducing that provision, because I don't know how many people, I don't know whether the intention of that provision is to the real estate business, because even when you extend it to that, how many people will be selling land, just land on its own? The land is going to have something sitting on it, a building. So I would expect that provision is actually meant to extend that incentive to the building itself. So whatever is sitting on the land, whatever benefit that the land enjoys, the building should enjoy that benefit. So when you have that exemption of VAT, it should also extend to land. So if you ask me, by all means, I don't see any reason why that incentive cannot be extended, or why it can't be interpreted in that manner. I know Mr. Okpai will have his own views. I know FIRS is very passionate, and I kind of understand how they will want to interpret that. But if you ask me, it should be extended to the lease of office building, residential building is building, whether it's office building, whether it's residential, really. I don't think there should be any distinction between the two. A building is a building. You can decide to do whatever you want to do with it, and whatever exemption that a building should enjoy, whether it's office or residential, it shouldn't really matter.
All right, thank you very much, Chinedu. And then thank you for...
Can I say a few things on that?
Yes, please. Go ahead, Chinedu, before we allow Mr. Ofai respond.
Thank you very much, Yetunde. Just to add to what Chiwendu said, yes, the FRS has in the past tried to clarify or put a difference between the commercial building and residential building, and VAT, and try to exempt VAT on the residential building. But in the law doesn't make any of those distinctions, and there's a reason why the law has been revisited again under this Finance Act, and the exact wordings is interest in land and building. So the question really as to whether VAT should still apply to leases and rent will be whether a lease constitutes interest in land and building. I think once we can answer that, we need to say whether it applies or not. And in my own view, I think, you know, like the lawyers will say, when you lease an asset or you lease a building, you have a possessive interest on it. If somebody trespasses on it, you can question why the person trespasses. So you clearly have an interest in such a leased building or land. So to that extent, I think the law, the way it has been drafted now, should put that matter to rest.
All right, thank you very much, Chinedu.
Yeah, but if they even okay, sorry.
Okay, Sebastian, let's hear from you.
I don't think there's an ambiguity there. It's clear because also that's what that introduction has done. Yeah, because if you look at where it talked about what will constitute vatable service for incorporeal property, then that means you know that leasing is an exploitation of your interest in a land. And if that is qualified as part of what is defined as a taxable services, and the law has said building and the land is excluded, of course the lease part is already follows that part. So for me, I don't think there's an ambiguity on that one. It's a clear provision of the law or something like that. Yeah. Thank you.
All right. Thank you very much, Sebastian. And thank you for not allowing me descend into the arena, because I'm supposed to be an unbiased umpire. So if will allow you to respond. Sorry, just a minute. I think you're muted. So, I mean, flowing from what Chinedu, Sebastian, and Chiwendu have said, I think the law now seems to be clear. It seems to be clear without a doubt that any interest in land, which also includes leases, be it commercial or residential, given that there's no distinction, you know, in the law, VAT should not apply. So whether it's outright sale or a lease, short-term, long-term, you know, based on, you know, the contributions of Chinedu, and Sebastian, VAT should not apply. So would like to hear the views of FRS in this regard.
Yeah, thank you very much. Yeah, FRS as a law-abiding agency of government will definitely abide by any law that's made by government and become a law. But in any case, it is part of the things that we are studying, that we are working to come out clearly with our own understanding of what the law is intended to do and what it intends to achieve. I don't have any argument from my personal point of view that as a lawyer, we are told that whatever belongs in the land belongs to the owner. Quickly planted those solo sedits. That was the last one they used to tell us then. But however, the service FRS and agency is still studying on this provision and other provisions that are going to impact negatively on the revenue of government, to look at it very seriously and then come up with a position. We are not going to, if like the two husbands have said, panelists have said that it's clear, you two, Yetunde, you are an expert on it, you already said it's clear. We are not going to say it's unclear or it's not clear, but we'll look at it and come up collectively with our view and opinion on that. Let me not rush into it to say, yeah, this is where we are going to. I'm not going to change what the law have said, but we are going to look at it to know the intent and the purpose of what it was intended. Once we agree with it, we'll come out with the position to part of the circular we are going to issue. So thank you very much on that.
All right, thank you very much. We look forward to your circulars, which will provide clear guidance on the provisions of the law. Okay, so I would still come back to you, Chiwendu. Now, we're looking at the amendments to the CETA, with respect to the definition of gross turnover. Gross turnover has been defined, as gross inflow of economic benefits during the period arising in the course of operating activities, when those inflows, result in increased equity. So it includes everything, that has come into the company. However, when you look at the definition of minimum tax is defined to be levied on gross turnover less frank investment income. Does this imply that other exempt income, such as income from treasury bills, federal government bonds, which are clearly exempt, based on other legislations, should be considered when calculating minimum tax? Or do you think it's clear, if it's exempt, minimum tax should not apply? Or do we need further clarifications, in this regard?
Thank you, Yetunde. Quite frankly, when I saw that provision, I also had that worry. But when I look at the law, my worry, I tend to worry less. And the reason why I say I tend to worry less is that one of the key principles of taxation is also fairness. And where the law has made certain provision with respect to how a particular item should be treated, even where one provision there seems to want to contradict it, I think it only makes more sense. And I want to believe in the law courts, such a provision will be interpreted in the favor of the taxpayer. Now, when you have the way the Finance Act has then, defined gross revenue, to me, it will only make sense, or it will only be fair and reasonable for you to exclude items that are already exempted from income tax. Take for instance, you have a company whose majority of their revenue are exempt, and you want to compute minimum tax. What you essentially be doing is that taxing the same revenue that has been exempted from income tax. So yes, we.
Okay, thank you very much, Chiwendu.
Yetunde, can I say something actually?
Yes, go on, sir.
That are not liable to tax.
Sorry, just a minute.
And those constitute.
Okay, Chiwendu, we will come back to you. Let's take Sebastian's contribution. We'll come back to you, Chiwendu. Go ahead, Sebastian.
Yeah. So for me, the question is there even an ambiguity at all? Because it said, for the purpose of the minimum tax, it shall be a percentage based on gross turnover less frank investment. So the definition of those gross turnover contains frank investment income. But the part, the taxing provision mentioned, yes, I know what gross turnover is, but then for the purpose of calculating your minimum tax, those ones that are considered frank investment included in the gross turnover should not be included in that calculation. So it's clear, it doesn't need to include those ones. So maybe because yes, what is gross turnover? That's a broad definition under the interpretation section. But for the taxing provision on the minimum tax, it said gross turnover less frank investment income. So that means ab initio to recognize that the definition of gross turnover includes some items that are frank, but that for the purpose of a minimum tax calculation, those should be excluded. Thank you.
All right, thank you very much, Sebastian. I think what we were also looking at was in terms of other exempt income. So frank investment income.
Thank you.
Frank investment income is not the only income, that is exempt. We also have income from treasury bills, federal government bonds, and other exempt income, which was a similar issue, that we faced under section 19, the old.
Yetunde, the CD Tax Operation Group want to make a comment. Maybe you recognize him. Yetunde.
Yes, sir.
Okay. The CD Tax Operation Group, Oluwafemi is here, waiting to make a comment.
Okay, so I will just introduce Mr. Oluwafemi. Good morning, sir. Thank you very much for joining us. I think I've done an introduction at the beginning. I know you've had some technical challenges, and the same with the FIRS chairman and the LIRS chairman, which we're still trying to connect with, currently. Mr. Oluwafemi, please go ahead. It's a pleasure to have you here.
Thank you, Yewande. I hope I can be heard now.
Yes, we can hear you, sir.
Okay, so I appreciate you. Thank you. And all the other panelists, my colleague here, Mr. Upai, Sebastian, and the others. I appreciate you. I was fortunate to be part of it in the very early stages, but somehow I got cut off at some point, and it's been quite difficult to reconnect until now. Without any attempt to reinvent the wheel, I just want to make one or two short comments so that we can make progress, and probably later I can have an opportunity of coming back. There are one or two areas which I would have loved to emphasize, and I have a feeling we have passed that stage now. That's why permit me and all our listeners to draw us back a little bit. The issue of minimum tax is germane here. It will appear from the word phraseology that FIRS might have to be refunding money now, as it were. We found that very interesting, really. And I'm sure some folk out there, they are probably trying to put up their papers to bombard us with refund claims now, excitedly. But I just think, that there is a mistake, there's some form of an error there, I can see my friend smiling. The information file is actually
okay, I've already told them that we are.
That there will be clarifications. God bless you.
Yes.
There will be clarifications to come later. It is known worldwide that, I mean, somebody has mentioned the issue of certainty and all of that. One of the tenets of taxation is that you don't legislate retroactively. So if we are not going to ask for more from our people from last year, why should they expect a refund? I got to know that it was just financial years that were mistakenly, I assume it's a mistake, changed to years of assessment that makes it to look like we have to be going back. So I thought I should just put that on the table, but how exactly the redress will come, like Mr. Upai must have told us, I don't know exactly how it's going to take, whether it's going to be by pronouncement or a quick amendment or whatever. I don't think we can afford to wait till next year before we take care of that. So generally speaking, I love the question about what impact are we expecting from an FIRS point of view in terms of revenue delivery this year. A lot of our potentials were taken away last year. I mean, we all know that small companies were not supposed to pay tax again or even charge VAT. and even to some extent, medium companies' rates were reduced, and all of that. But we were happy this year in the sense that granting us the opportunity of technology deployment is a big thing, it's a massive one. Prior to now, we have had resistance in terms of these legal inhibitions. You want to automate a certain sector, what you get there is that, look, there is no law that says I must subscribe to your technology. Some others will tell us, even where we have struggled to do it to some extent, oh, the law allows me to hold what I have been your agent, what I've taken. After all, you are not going to pay me for administering that, your VAT or withholding tax allows me to the 21st day of the following month. Why are you wanting to take that away from me by the back door? And so many of us such reasons. But thankfully now, this has resolved that. So technology is going to help us massively. And I also want to say one big area for us is this compulsion for free trade zone. Thank God Mr. Okpa is on the panel and is directly in charge. He knows the amount of struggle he has had to try to convince these free trade zone authorities to at least file returns. We are not saying we want to counteract what the law says. If you are exporting, if you are operating in the free trade zone, we can't take it away from you. You won't pay tax. But don't forget, the moment you cross into the customs territory, you have to pay for that. And how do we know that if you don't file returns? You also have obligations, to my mind, of being our agents. I mean, some contractor from the custom territory is dealing with you, is building for you, and all of that. You need to withhold taxes. You need to charge VAT. So these are the areas we have been having a problem. But they will tell us off that no, by our act, we are not supposed to even have anything to do with you. We're not going to file, and so that's very cheering. So to that extent, if only these two has taken away for us in the financial 2020, I think our results will be much, much better this year by the grace of God. So let me pause at that point for now and hand over back to you, Andy. Thank you for the opportunity.
All right, thank you very much, Mr. Oluwani. Well, we've heard you. We would await the circulars, which would clarify, some of these areas of ambiguity. And I think that's the essence of forums like this, that give both taxpayers, the consultants, and the tax, authority opportunity to discuss, openly and frankly. So we thank you very much for your contributions. So I will go to Chinedu for my next question. Unfortunately, I must apologize. The chairman of LIRS was supposed to be here, but he's unavoidably absent. The same for chairman of FIRS. He had tried to connect with us earlier, and that's why we have Mr. Oluwani here representing him. So we'll go to Chinedu. Now we have a question from some of our attendees. Now, the question says the new Finance Act 2020 gave a new definition for gross emoluments, thereby imposing more burden, on employees in terms of pay, instead of ameliorating the suffering of the small number of people who are still engaged. Of course, we know that as a result of the pandemic, people lost employment, there were pay cuts and all that. Why is this, affected? And this person is essentially trying to understand, why this has been done, at this period, and what's the reason behind it? While other people are trying to offer, more incentives to taxpayers to cushion the effect, this seems to be having a counteractive effect. I know you cannot speak, for the tax authority, but would want to at least hear your views. I've heard some people who have the opinion that, it was an unintended consequence, almost like a drafting error. So would like to hear from you, Chinedu.
Okay, thank you very much, Yetunde. To be clear, can you hear me?
Yes, we can hear
Okay.
you.
Thank you very much. I think clearly there is no good time to increase taxes in the taxpayer's view, and especially not in a period like this when there's economic issues, pandemic, and all that. But so I agree that the impact, and I've tried to simulate some of the figures. It comes to about 2% or 2.7%, depending on the level of income of the taxpayer. About 2% increase in actual tax will be paid. So that is something, and I'm not sure that was the exact intent. But let's look at, I think, to be fair to the drafters of the law, we need to look at all the changes made to PITA comprehensively. First, you had the people earning minimum wage and below exempted completely. I think that's a very positive thing. You have the life assurance premium, the exemption of life assurance premium, which was, I think, was erroneously deleted the last time. I think it has been restored. Again, that's a positive thing. Then if you look at the computation of the CRA, in my view, I don't think the law originally intended that when you are granted a relief, that relief would form part of computation of another relief. If you think about it plainly, I don't think, maybe that wasn't the original intention, and so maybe this was a correction of a drafting error rather than this being a drafting error. That's how I view it, because I try to think about it. I don't think any government, and I don't think this government went out to increase the tax rates. I don't think it would have been a wise thing to do. I think it was an attempt to correct something that shouldn't have been there in the first place. Because when you look at employed people who compute at PAYE, it's simple to just look at, okay, pension and assurance premium and all that is easier. But if you really think about enterprises, that's when you understand why they have to draft it. You have, enterprises who have maybe reimbursable expenses, who have other income like frank investment income. To really say that all those incomes should form part of computing CRA, I wouldn't think that was the intention of the law ab initio. So if you think about it in that regard, then you begin to understand at least that they were not trying to be punitive. Yes, the impact has been that there's an increase in average rate of tax for the average person, but on the balance of it, I don't think it's as bad as it looks.
All right, thank you very much, Chinedu. Okay, we'll just take a 30-second comment from the representative of the taxpayers, Sebastian. Please go ahead.
I think for the taxpayer, it's an increase in disposable income for now. But I can understand what they were trying to do. Previously with that, an enterprise he will claim his expenses and also claim the consolidated relief allowance, which means it's a double dip. But I think where the mistake came in is that they should have differentiated that from somebody under PAYE as an employee in difference to the person that is functioning as a sole proprietor on enterprises. Because for a taxpayer, that some of them got their salary cut, the effective tax rate is high for them now. Two, we've been always also in the past years trying to encourage people to contribute more to their voluntary retirement. This definitely is a conflict on that part, because people will say, of what benefits or what incentive do I now have to contribute to a retirement savings account if that amount also already will also be subject to tax at the moment? So I think it's an error. Like you said, they wanted to correct for the enterprises and sole proprietors because it was a double dip for them last year, but then they mistakenly or then created another problem for the guys in employment, which is those that are shouting now, because for them it's an increase in salary for them. It's an increase in tax payable for them as well.
All right. Thank you very, very much, Sebastian. Thank you very much to all our panelists. Unfortunately, the chairman of LIRS, is unavoidably absent. We expect that within the coming weeks, the LIRS would also issue public notices, to address some of these concerns. So very quickly, I'm going to give each of my panelists just 30 seconds to give their final remark. I would start from Mr. Upai. Mr. Upai. Okay, I think, Mr. Upai, you're muted. So let me start for Chinedu. Chinedu, 30 seconds, final remarks.
Okay, I mean, in general, I think, like we've said already, it's a good thing that the tax laws are now very dynamic and people have opportunities of making inputs. Even where you get something wrong or you have an unintended consequence, there's opportunity to correct it, within a year. So I think we are in a very good place, and I would just encourage that we continue to do that. One regulation, not necessarily a law, but a regulation which we have managed not to look at all, is the withholding tax regulation. I'm not sure if it's FRS that should take that on board, or because again, it may not be it may not necessarily have to be part of the Finance Act, but I think that's one area of law where there's a lot of clarity that people require, and that's one area we have not touched at all in these 2 years of reforms. So I would encourage maybe the FRS, as they again look at the whole issue of bringing clarity and certainty, things like ordinary course of business and all that, being able to redefine those things and make it clear, so that especially people because there are a lot of taxpayers who want to comply. Those people are people that you want to give a lot of clarity so that they can comply, while you then go after the defaulters. Thank you very much.
All right. Thank you very much, Chinedu. So I'll move to Mr. Upai. Please go ahead.
Okay. Thank you very much, Etunde, and everybody on the panel. Like we said from the beginning, we in FRS cherish this kind of gathering where both the taxpayer, the consultant, the revenue authorities, both state and state level, federal and state level, gather together to discuss tax issues. Like we said, yes, on the issue of operational guidelines circular, like I said, very soon will be issued circular to clarify certain ambiguities or certain things that for the public, so that it will be easier for them to pay their taxes. And like I said, the chairman is interested on the use of technology to improve ease of doing business. And everybody too is interested in doing that. So we want to ensure that they assure the taxpayer that we are going to simplify, explain to them all the nitty-gritties in the Finance Act to make it easier for them to file their returns and pay their taxes and remittances. Thank you so much, Etunde, for this gathering.
All right. Thank you very much for coming. Sebastian, 30 seconds to give the final remark.
Okay, so the first part is just to thank the FRS for the openness. At least, no matter what we said, I've seen increased openness with FRS to dialogue on some of these issues, and so for me, that is actually a very good step in the right direction. Then the second part is that the OECD tax framework requires that at least companies and taxpayers are given minimum of 90 days to change their system when there are law changes. I don't think we obey this thing because the law was passed in December 31st and then it becomes effective. So we need to look into that, because then if there's going to be a system change, because I'm talking from a taxpayer, for example, if we need to change our software and technology to adapt to new laws, at the minimum, it will take us 90 days to do that. Then the last part for me would be the issue of consultation. They try to do a consultation when we are passing that, but in future, it will be better if those consultations are done on industry basis. I think they will get more traction and more very sensible input in the changes they want to introduce. Thank you.
All right, thank you very much, Sebastian. So I'll go straight to Mr. Uluwani, who is representing the FIRS chairman for the final remarks. You're muted, sir.
Okay. Hello. Okay. Thank you. Thank you. Thank you once again, Yetunde, and all our colleagues on the panel. I just, like Mr. Upai said, to prepare us for a round of robust engagements like we had last year for the 2019 FE. And I know that Sebastian and one or two other panelists have also mentioned that we are now open. We are engaging our stakeholders before we take our decisions, and you can expect that this year will probably be much better than that of last year. We'll come out with our circulars and all of that. Finally, let me also mention that the last two concerns, Sebastian spoke about issue of giving time for changes in technology is been noted, and I think it's a very good point. And Chinedu also mentioned the issue of data. There was one particular last point that Chinedu mentioned, which I thought I should.
Withholding tax.
Withholding tax. Thank you. Yes, that we need to go and look into the regulations of withholding tax. Apart from the points, the reasons you have highlighted, one area that we want to really use that to harness something is on the cross-border transactions. We have done SEP, we have done a lot of things, but yet we're having challenges as to what is the basis of taxing the income. That last bit, you understand what I'm talking about. So probably the regulation will be what you now bill us at eventually. Thank you so much, Yetunde and everyone once again, and all listeners. God bless you.
All right. Thank you very much, Mr. Uluwani, who is representing the FIRS chairman. So we've come to the end of this session. We thank all our participants for listening, taking time out of their busy schedule, to listen, engage with Anderson Tax, the tax authority, and representative of the taxpayers. Before we go, we'd just like to announce that our next training session comes up on the 10th of February, and it's essentially going to take a look at the tax and regulatory outlook, for 2021, and of course, take a deeper dive, into the implications of the 2020 Finance Act. So we look forward to having you on board. If you'd like more information about this training, please reach out to us. So once again, I'd like to thank all our panelists for this engaging and enlightening session. Thank you all, and God bless. Have a lovely day.
Thank you.
Thank you, Yetunde. Bye.